Hello, founders and investors. Welcome back to Next Round Ready. I'm your host, Chris. We have Kevin Moore from Sirac Ventures. Kevin, welcome to the show.
Thank you for having me.
So, what got you into investing? Like, what got you to this space?
Venture capital is the root of every investment. And when I first started working in financial services, I started to realize that I was investing in publicly traded companies, but the curiosity of how did these companies start? How did this all begin? The genesis, that's venture capital. So after a period of years, everything sort of led to, of course, I'd be doing this because I was curious about it decades before.
Okay. So you kind of like already had that curiosity. I think it's kind of inevitable if you go into the financial space. It's like one of the closest branches to that, right?
It is. I mean, if you think about public companies, there's public tech companies now that everyone knows, Amazon, Microsoft, Google, they were all venture-backed companies. And most people probably don't think about that way. But when you're an investor and thinking about maximizing opportunity, figuring out and finding those type of companies early is very exciting. And maybe just to add a little more color to that, I started out in financial service. I was an engineer who switched into finance, didn't have a connection in the venture capital world. So I wanted to get my feet wet just to learn as much as I could about investing in general. And after a series of different opportunities, it finally led to the venture capital industry and ultimately to starting my own firm. But it started with that curiosity of I want to work in venture capital. I don't have a network, but I need to know how all this works. And eventually, one thing led to another, and I'm running my own venture capital firm now. But it was not a linear process by any means.
Okay, so you didn't start off with like I want to start this firm, and I think that curiosity is healthy because it kind of is the thing that will push you where you still get tired, you could still burn out, but I find that it happens less when you have that natural curiosity about that thing you're really focusing on. And is that something that really helped you really push to starting your own firm? Because I know that you have to go and raise capital, you have to find the founders. It's a lot different from just being an angel investor.
Totally different because you have to operationalize all the things that you enjoy doing. And that's the firm building part of it. But I also think that as an investor, and I'm sure you've heard this from some of your other guests, I see a lot of myself in the type of founders that I like to back. People who are curious, who will do the self investigation, who will take the first step to do something risky. And the way I thought about it was I'd love to learn about that, but there's some things I still need to learn before I go all in. And that took the risk out of it. But curiosity is certainly one of my driving characteristics.
And so, what are some of the other traits that you look for in a founder? As I love asking investors this question because it's always so different. Some care more about grit or work ethic. One told me their education, in terms of where they
Mm.
went to school and what they've learned, because that kind of shows their focus and that they're really smart. So, I'm curious to know for you what those characteristics are that you look for in founders.
I can rattle off a few: humility, visionary thinking, big idea, someone who is trying to shake things up and do things differently. And it sort of plays into the thesis of the firm where, we're looking for founders whose life experiences have put them in a position to see things differently. And I guess further to that, because they see things differently, they're able to identify these structural inflection points that could be technological, regulatory, or cultural shifts that allow them to take advantage of things people aren't seeing. And I think it starts by having that curiosity and that humility and that drive and that determination. And quite frankly, courage. Not everyone is scared. I think everyone's scared about something, but the
At
courage
some
to do
point, yeah.
something differently. You know what I mean? And I think those are characteristics that we look for, but it has really played a part in defining categorically the type of person that we're looking for addressing problems within industries that are changing. And it does take someone usually from the outside because the people on the inside can't see what people on the outside see oftentimes.
That makes sense. That makes sense. So, when it comes to the founders that you want to invest in, how important is their team and the people that they have around them?
Critical. The ability for the founder to attract the right person is so hard. One of the questions I always ask myself about the success or the long-term speed and acceleration of even Sirac Ventures is who are the right people. And if that founder can imbue their work ethic and beliefs and cultural thoughts and everything about what they want to do organizationally into someone else, or find someone who's like equally matched with them, that's a magical thing. That's difficult to do. And many of the problems that we see with early stage founders, especially as the companies start to grow, is talent. Finding people. I've actually learned a lot about this because my wife, she has worked in talent management for the last 20 years.
Hmm.
And this is the biggest determinant of a company's success are the people. So imagine most corporations have a full-time person working on this, but a startup, the CEO is usually the one working on
It's
that. He's
one
doing sales,
person.
he or she's doing sales, all this everything. They're doing everything. But it's such an important part of the puzzle.
Yeah, I think leadership it's a priority that I think founders should kind of look into more.
Hmm.
Like, what kind of leader are you? Are you qualified to do that? Because I think that has to be a part of it, especially as you get to that scale process. Is you need to know what kind of leader you are and how you want to lead your team effectively. And there are a bunch of different ways to do it. And I think if you take that kind of approach to it, you can be more effective versus just trying to be a leader doing what you think Steve Jobs might have done in that situation. Like, that doesn't work for everybody.
CEOs aren't always the leaders. They might be the decision maker, but you can be a leader on a team and not be in a decision making position of authority. So I think leadership, to your point, is critical. And that can be a difficult transition for people because let's think about this in the reality of the situation for most founders is they're working so hard just to get the company off the ground. The idea of bringing someone in and then stepping back to train that person or talk to them about something, that's a difficult thing to, what they call it, context switching. A
Yeah.
lot of people don't enjoy that. It can be very challenging. Heck, I just hired someone on a part-time basis and I have to context switch all the time to show them things and then get right back to what I'm doing. So imagine doing that at scale and with limited resources. I feel the pain of founders. I get it.
Right, right. So with that being said, what are some of the red flags you look for that if you see this thing pop up in a founder when you're reviewing their deck or you're on that call, maybe even meeting them at a demo day where you're just immediately like, nah, I can't work with this founder.
One of the things that I've thought about this question a lot, and one of the things that drives a lot of VCs insane is too many trust-based statements within a pitch deck or from a founder. Where's the evidence? Or the numbers don't make sense. I've had some founders approach me, $20 million valuation. Okay, what's your revenue? Well, we're going to do this. Or do you have a finished product? You don't have it. That's an extreme case, but it's very common. I'd say it's extreme, but it's also common. Or I've seen it enough to where it doesn't surprise me anymore. But those are just
Mm.
immediate, this person does not know what they're doing. And I've seen so many, in fact, I've seen so many decks like that. I don't want to go too much into it. But when things just don't make sense or lack of coachability, I mean, I could go on.
Well, let's go into the deck one because I don't think that that's talked about enough from like what numbers you should have in a deck. I think it's kind of confusing for founders because you, especially in that pre-seed or seed stage, you'll hear some investors say that the numbers don't matter if you're less than a year in business, but then the conversation is also what's your traction like? Do you have customers? Is a product finished? Like, so what numbers are you suggesting that founders should have represented in that deck?
Unit economics, that's a clear one. Show me clearly how do you make money off of one sale. And at the end of the day, you want that number to be positive because that ability to scale and repeat the ability to make money is going to translate into potentially long-term revenue. In the deck, Projections are important, but they're far less important than showing what you've actually already accomplished. Even if it's 10,000 in revenue or 100,000 in revenue, those numbers demonstrate that somebody out there actually wants this product, and you need Sirac Ventures money to build a system to repeat that one sale over and over and over again, or to land and expand, or to hire a salesperson, or whatever it might be. Clarity in the pitch deck is far better than trust-based statements that say, we're going to do this and here's why, or we're going to do that, or we're doing this and doing that, and then things not making sense. I can see that immediately in a pitch deck, just having looked at so many of them over the years.
Wow, that's a really good one. I don't think I've heard it put that way before in terms of trust-based statements, but that makes 100%. That makes sense. I get it immediately when you say it that way. And so, outside of that pitch deck, I want to talk about your thesis overall and the kind of founders that you like to invest in and the companies you're looking for. What is kind of your area that you're focusing on?
We have had really good success with B2B to C consumer fintech, and I never thought that would be the case in Sirac's portfolio. Everyone frowns upon consumer fintech, but I think
Yeah.
if it's going through the mechanism of a business to business channel to get there, the end product or the end user is a consumer. The buyer might be a business, but that buyer's business is a function of how many consumers consume that product. I never thought we would do that, but an example of that is a company called Greenline, where they're selling a software product to help banks to look at other factors in the underwriting process so they can approve more loans to more people. But the end user is a consumer. Or Mappa is another one of our portfolio companies that they sell to companies, but the end users are the people at the companies that actually buy the product. So it's one of those things where that's a pattern we've seen in the portfolio. Also, we are exploring cybersecurity as a vertical. There's
Mm.
so much speed happening with AI and the proliferation of it throughout enterprises, even smaller companies, that I fear people are overlooking the severity of how AI can be misused to disrupt organizational systems. There's been some interesting tech companies that we're following and meeting with right now who are building solutions to some of these problems. And I feel like that's going to be an area that if you can develop an expertise in it by way of bringing in an outside expert, or you yourself are an expert, I think cybersecurity in this next era of AI is going to be huge. We just have to get comfortable with finding the companies that are doing that in a scalable and meaningful way. And it's not just some sort of company doing something that's just more of a feature, but more, we're looking for things that are addressing the root cause.
I like the different verticals you're in. I think all of these are really changing. I think all of them
Hmm.
are impacted with by AI in some kind of way. Like
Right.
the cybersecurity one is just it's huge because now I knew we were going to a different level when my mom started sending me the AI stuff. I was like, okay, we're in a whole different realm now because I'm the family nerd, so I'm reading the books. I don't even need to, but I have certifications in AI stuff, and I just study it just because I want to
That's
stay on
smart.
top of it. I just want to be interested. I'm
Hmm.
curious about these things, but I think when these kind of things that a small group of us as people are interested in become more mainstream, that's when you know that the world is changing. And I think we're hitting that now with the money aspect, and then like you said with the security aspect. And I think the way banks are using AI now, it might get scary if we don't get a
Hmm.
tie handle on it quick.
Man, it could get out of control, but the excitement around something also there's a negative to it. Not that it's going to be turn out bad, but we have to understand how to protect the downside as an investor. Like, how do you protect the downside? And cyber is that way. I have a friend who knows this industry in and out and is one of the advisors at Sirac Ventures. And his larger tech company purchased a cybersecurity startup for a really good amount of money. And I said, why did you guys buy this company? And he said, while we were currently building something like this internally, the speed at which they were building what they were doing was just so much faster. Even though positionally we were at the same point, we could move faster with this company. So I could see some other cybersecurity startups who are providing this solution for large enterprises sort of getting cobbled up by these larger companies that understand this is a big risk. And if we don't build this internally, one, we're going to have some vulnerabilities, or we can just acquire a company that's already coming up and doing this and is moving faster. So I think more of that's going to.
I totally agree. I think it's going to be a lot faster because being somebody that's been like on ChatGPT, and I built some AI tools myself very, very early on. It's insane what's happened in the last 2 years. How fast it's been moving. Like it's every day there's something new, something like the pictures and videos is really the tip of the iceberg. Like honestly, that's the
Yep.
main stuff we see, but it's so much more happening behind the scenes that I don't think the average person really can understand. But I want we getting sidetracked on AI. Let me get back to it's inevitable. It's such a polarizing topic. With you as an investor, I'd love to hear about some of your best investments, some of the ones that you're most proud of.
At Serac Ventures or in general?
Let's go with in general.
Best investments are the ones where it stems from a founder who people really underestimated. When I was at my old firm, right, let me just talk about Serac Ventures. I think that's a great example. And I'll use Mappa as an example. And big ups to Mappa. They're one of my favorite founding teams. Here's a person who grew up in Sao Paulo, Brazil, who worked in marketing and saw this need to help employers to consider other factors that they weren't considering in their evaluation of people that they were hiring. So they created this software that analyzes your voice and can take a snippet, say, of this conversation and give you metrics to consider that otherwise you would have never been able to analyze, that could show you, is this person someone who has confidence? Is this person a natural leader? What type of personality traits does this person have? And quite frankly, who are some of the other people that this person might be able to work with? The beauty of this technology is it completely eliminates the bias that often occurs upon visual conversations or colloquial conversation. Like someone might have a different dialect. All that stuff is ignored. And this technology gets to the root of what are sort of the tones and sort of cadence of that way someone talks that would indicate that they have these characteristics that would fit well within the team and culture that you have at your organization. So it sounds magical, but the ability to do that at scale and deliver it in a package such that recruiting managers can use it and accelerate timeframes for which they're finding people, as well as continue to build culture in their teams in a manner that's cohesive. And not to say that anyone's readout from that analysis is wrong. It just gives you more clarity into who that person is and how they function. And it's one important data point at the beginning of the process. It's so revolutionary. I actually did this myself, and I was blown away with how accurate it was about me. And I try not to have any sort of confirmation bias, to only look at the things that were positive about the results, but it also shows you some of the things that aren't so positive that I was like, oh man, that's spot on. This company's revenue has almost doubled since we've invested in it this year. And I think that the long-term upside for what they're doing is just incredible.
Yeah, I think there are certain products that will have a different type of impact on companies, therefore the world, and sometimes those get overlooked. And I think something like that, it sounds just super revolutionary. Now, do you
But
have?
before you go on, one point I'll add to it though, the reason why I think the product is evolutionary, it's not because they're amazing programmers, and they are, or not because it's AI, because it is, but it's because this founder comes from this problem from a completely different perspective
Mm.
and was able to envision the possibility of that happening because of her personal life experience. And to me, that's such a left out part of these stories that we get down to the technology. But I like to when I'm talking with a founder, I always ask every single founder, like, why did you create this? Like, what was the decision that went into you making this huge sacrifice to bet everything on building this? And that's when the stories come out. And I feel like that's an important part of what we look for in Sirac Ventures is that founder going to have enough staying power and enough motivation to stick with that idea because it was something that was a huge problem for them. It was different, and they're going to pursue it with everything they got.
Man, that is such a good point. One of the questions I ask founders when they're on my show is, why are you the person to solve this specific problem? And
Great question.
it kind of separates them from the problem for a second so they really can understand how their worldview is different. And this is also why I enjoy connecting founders to investors, because I think there are some founders who might not have the educational background or the connections, but they've approached a problem with a totally different solution that nobody else could have thought of or
Mm-hmm.
imagined or developed. And they can get easily overlooked in a lot of these different spaces because they might not have the look of venture capital. That's just the truth of it sometimes, to be
Yep,
honest.
that's the truth. One of my other portfolio founders, solo funds, very popular. I came into them at a later stage, but these are two individuals who grew up in an under-resourced community, and that's the politically correct way to say that, who saw a way to help that community to get access to small dollar loans. And they told me that many VCs in the beginning said, you're never going to make money in that market. And they said, well, we come from this place. We know how to design the terms and the structure such that it can work. And they've absolutely killed it. But I think these are just examples of what I'm talking about. People who understand these big problems differently because they don't come from this position of this default bias of this isn't going to work. They see it differently. And I tell you, one of the hardest things as a GP is, how do you articulate that to an investment team? How do you
Mm.
create a model that is repeatable such that you can show people this is what we look for? And it almost makes me feel like you have to come from the experience of thinking differently in order to identify people that do. Maybe you
I,
help kind of answer my own question.
these are interesting conversations I love to have, because I don't think founders get this side of VCs and how hard it can be for you all sometimes when you're going to the investors that you work with, the people you work with, the people you're responsible to and you answer to. Essentially, over time
Mm-hmm.
you have to go and explain to these people why you invested in this founder and like where their money is going. That's just reality. And I don't think
Right.
that's not something that's talked about on LinkedIn. Like, but
Right.
it's a very prevalent part of VCs and how you all make decisions.
One of the things I love writing about, and I wrote about it today in my bi-weekly blog, is the three ingredients to success is the right founder, building the right product or service in the right market or to the right market of people. And of those three components, the one thing that you can't usually easily change is the founder. You can expect the market to change, the product might need to evolve, but if the founder is bad from the beginning, it doesn't matter how great the market is or how great the product is. If the founder, which when I say founder, I mean like the team, maybe, that's difficult to change. But when those three things work together, man, it's incredible.
Man, so I know you got to run. I don't want to keep you here all day, but this has been such an interesting conversation, man. My last question I love to ask the investors is, what's some advice for the founder who's raising right now? In the next 3 to 6 months, they're trying to get that capital in and they're out there on a hunt for that funding. What advice do you have for them?
Figure out how you can demonstrate efficacy of your business model with the least amount of money. So many founders put together a use of funds that sometimes is far more than what they need. And they think that because they put in their own sweat equity or they've raised some angel dollars that they've proven enough. But most in this market, investors like us want to see a certain amount of revenue. And if founders are interviewing and talking to VCs, just ask them, like, what do you want to see by way of our traction before we come back and talk to you? And if you can figure out what is that number that you need in order to demonstrate repeatability of the business model, then people at my stage who are investing at the seed stage are going to be more attracted to that than not.
Oh man, I love that. That's a really good way of putting it. Just straight up asking instead of guessing, just going ask.
Yeah, just ask.
And
But a
let me
founder
ask
has
you,
to be brave enough to do that.
oh, that's something I was going to bring up because some founders, when they get turned down and they get that first no, they don't want to go back again. But I think it's because the conversation after the no kind of it lulls. But if there's a direct question like, "Hey, what is it that you really want to see? Like, give me something concrete to shoot for," then that could kind of give you a roadmap, right?
Yes, it does. However, investors, we understand risk. One of my, if someone I know that I really respect, one of the things that they say in their materials, they said a documented risk is a mitigated risk. So if a founder tells an investor straight away that we need X amount of dollars and here's what we're going to do, we don't know if it's going to turn out good or bad. In fact, the last investment that we made at Serac Ventures, I straight up asked the founder, you know what? This is either going to work or this is going to fail miserably. Do you agree with that assessment? And he, to a certain sense, said, absolutely. I think you're totally right. And if it doesn't, then we'll have to regroup and figure it out. But it demonstrated maturity, awareness, and just this clarity of what they were doing because it's a really big challenge and opportunity. And I wanted to know that they understood the risk of even doing this themselves because they're also taking a lot of risk. So I think that sincerity about the risks of what this is all doing resonates so deeply with investors.
Man, that makes so much sense. Founders out there, I know y'all love this conversation. Kevin, can the founders reach out to you on LinkedIn or are you against the cold outreach?
I take those all day. I make a point to respond to every single message I get on LinkedIn.
Love that, man. I think more investors should be like that, like because it just you can miss out on some great people if you just don't give them the time of day and just have a simple back and forth, you know.
I mean, I try to put myself in other people's shoes. I know it's a massive undertaking to start a company from the ground up. It's not just a change in your person, like you personally. It affects everybody around you, your family, if you have one, your friends, your job, if you're doing this at night and you're moonlighting trying to get it off the ground. I understand that. So I feel like it's just respectful to give people a response to say, you know what, this isn't a fit because they're worrying about whether or not they know what you think. Just tell them. To me, that's way faster than just avoiding somebody.
100%, man. Kevin, thank you so much for being such a great guest.
Pleasure. Thank you for the invitation.